Let's bring in senior markets correspondent Kevin Green to break down the levels that he's watching today. Kevin, good morning. Thanks so much for joining us. So when it comes to the S&P 500, what are the levels you're watching now that we're seeing this 1.6% decline this morning?
Yeah, we can talk about the open interest on the longer term time frame here. I think this is actually very interesting. So obviously we are seeing a sell-off here in the market here today, broke below that 50-day moving average, the 20-day moving average. But we had this channel that we had for this pullback basically since December of last year. We kind of broke above it, retested that channel line, broke higher again. And now we're basically testing it once again. So we really want to kind of hold around that 59.30-ish area in order for us not to get back into that channel. Because if we do get back into that channel, that's a little bit more bearish here for the market. So 5,900, you really want to kind of hold. 6,100 is going to be your area of resistance for the week so far. And the only thing that is a little bit concerning, obviously, the advanced decline line. We're seeing that red today. Not a lot of stocks actually participating in the upside. Not surprising. But that MACD is also potentially trying to cross here, and that actually is going to be a bearish cross. So the technicals right now, if you're kind of looking at it, the bulls still have the edge, but it's a slight edge right now. There is a little bit of a development when it comes to the bearish activity, and obviously a lot of this is going to be dependent on news flow as well, not just the technicals. So I would say, if you are trading this market, be a little bit more nimble. And if you're looking at it on an intraday basis, some of the levels that I'm looking at is 59.50, which we have actually a really nice hammer candle taking place right now. If you're looking at the 15-minute chart, the intraday chart, nice hammer candle where we kind of push below 59.50 now, right above it. Your first area of resistance, 59.70. Keep that on the radar. And then 60.25. Once again, these are levels that we see when it comes to options positioning, just from a volume standpoint so far. But there's a lot of this trading session left to go, and a lot of the news flow will have an impact, obviously. So these levels can be broken fairly quickly, and we just have to be mindful of that.
All right, so we'll keep an eye on those levels. Should note, the S&P 500 already off the worst levels of the day, 2 minutes into trading. But Kevin, are you looking at the fact that the S&P is certainly not as deep in the red as we might have thought last night as a sign that this is a resilient market, or just a skeptical market in terms of these tariffs actually coming to fruition?
Yeah, I think it's just an uncertain market. And I think you're actually seeing that with the VIX. If you're kind of looking at it, an 18 VIX or even a 19.5 VIX is not actually that high compared to what we are seeing on intraday swings. And it's not just what actually happened yesterday. It's what actually happened last week, too. The same thing happened on Monday where we had DeepSeek. Yes, we had a sell-off in the market. Volatility wasn't really priced in that high. And even on Friday, obviously a little bit of a sell-off. Volatility was not that high. So what do you do in this type of market? I look at the VIX curve, looking at the spot VIX, which is VIX, and then subtract that by the forward contract, which is going to be /VX, and just looking at how big that backwardation is, or if that number on this chart, if that line gets higher, that means the backwardation is getting wider and wider, and that really does point to the fact that we have uncertainty when it comes to the markets. On the other side of that, though, Caroline, if you actually start seeing that backwardation starting to move to the downside a little bit, that probably means that we might have more bullish activity in the market. So instead of looking at the VIX as a whole for right now, you're going to have to look at the curve in general to give you a sense of how the market is really positioning. And if you're looking at the VIX curve just in general, it's still in a nice type of contango or normalized market, meaning that each of these futures contracts for the VIX has kind of moved up in the same type of fashion. We're not seeing this massive backwardation yet, which would assume that the market's kind of pricing in short-term volatility. So once again, I think from a technical standpoint, we do have a bounce area. We have that channel line. We have volatility, which is kind of elevated, but not really blowing out yet. We're not seeing a backwardation of 6 points or 7 points. And if we start to get towards that direction, that's where you get a little bit more concerned that the market may break down here. But this is news flow driven. We do have some earnings this week, but I think over the next 24 hours, obviously, it's going to be based on if a deal can be done, or if talks around a deal is starting to happen here. And I think that's how the market's going to really try to trade off of it. And, one of the areas to kind of focus on is going to be crude. I think crude's going to be your forward leading indicator when it comes to these talks over the next couple of days.
Okay, so let's dig into that. What are you seeing in crude? Obviously, we're seeing a little pop here, up about 1.3%, trading below $74 a barrel. But what are the implications there?
Yeah, so let's just say this. If we don't have a deal, what could actually happen? A disruption of sour crude flows coming from Canada. That's around 4.5 million barrels per day. If we did have a disruption there, the impact obviously would probably raise prices up here in the near term. So when you're looking at crude kind of ripping to the upside on an intraday basis, that's most likely the market pricing in that a deal may not be done, or there could be a risk of those flows being impacted here. And when you see crude kind of moving to the downside, it's the backing out of that. And actually, over the last 20 minutes or so, you actually saw the same type of scenario there. You had crude moving up 74 and a half, almost $74.60. And after Trump's brief comments, we saw crude move down $1. And so the technical levels that you're looking at, the resistance areas, are really these anchored volume weighted average price areas, especially the one from January, which was hitting around $81 or give or take. And then also from those highs that we saw back in March or in April of last year. Both of those have this confluence coming down to around $74.97, basically $75. And a lot of this, once again, is supply driven, not demand driven. So supply issues or concerns about supply issues can be backed out of the market fairly quickly, whereas demand side drivers creates a little bit more sticky price action when it comes to crude. Right now, it seems like we are fading, or at least fading, these key technical areas of resistance. And I would look at a support area of around $72.25, $72 even, for potential bounces.
Okay. And crude currently at around 73.56 right now. Kevin Green, thanks so much for breaking it all down for us. Really appreciate it.